Alrighty, well, good morning, everybody. It is Wednesday, December 18th. We have officially rolled over now that obviously the volume is twice as heavy on the new contract as compared to the old. So we're now on the March 2025 contract. I'm going to go back here and take a look at what happened yesterday. Again, I've been mentioning this the last couple pre-markets, and that is that the market has been just kind of going back and forth in the 60-point range, not really going anywhere. And despite that, we've seen all week that the market has respected our roadmap levels nearly perfectly. So I want to go back to yesterday, another inside day, choppy, small range, no real conviction one way or the other. And let's take a look at how the cookie crumbled. You can already basically see it here, right? So I did transpose all of our roadmap levels over to the new contract. So this looks almost exactly how it looked on the old contract. So let's take a look here. Market opens. We did have an expectation coming into yesterday. If you recall, going into Monday, going into Tuesday, I think maybe even going into Friday, we did have clues for a bullish bounce, and the bulls did bounce the market. But as we see, once they got to the top of the range, the bears went ahead and ripped it back lower in every instance. Yesterday, we actually had a clue for the bears to jump in and try and pull the price lower. And you can see how the cookie crumbled here overall. If we just look at the whole picture, didn't quite sell off, right? They tried to continue going lower. And then we got kind of a little bit of a bullish push throughout the late morning, and then going into lunch, a lot of sideways. And technically, we did push to a lower low, right? But it wasn't like a nice, strong, bearish day. It was very back and forth. So let's look at the details here. Again, plenty of perfect opportunities to get in on the market. We had the bounce off the first roadmap level out of the open. That brought price right to the back end of our roadmap level. So you had a nice little scalp there for a little over 5 points, 6 points. And then you had a fade opportunity. So that was a bearish divergence testing into our roadmap level. Not saying that you just want to buy and sell every level perfectly, but that did hold for the pullback. Unfortunately, didn't quite get very far. So you only got about a 5 or 6 point sell off from there. And then you can see once price got back through the first expected resistance, our roadmap level, sure enough, they came right back and kissed it to the tick and gave you a nice opportunity for another 5, 6, 7 point trade back up. But if you were noticed, we were pushing right into VWAP. Okay, so probably wouldn't have been an area I wanted to hold for at least to take my first profit. I would have taken it at the VWAP and then left some runners in case price did continue to advance higher. But remember, our bias was expecting the market to push lower. So I would have been weary right around VWAP there. And sure enough, they did hold it. It's just they did have to get the peak through, and then it failed, right? So it just is what it is. Again, it was a very sideways, choppy day. But despite that, you can quite literally see to the tick holds off all these levels. So you see, I believe this is, get rid of that. Give me 1 second here. Got it. So you get your discrete hold off the roadmap level, discrete hold off the roadmap level, discrete hold off the roadmap level. Basically holds VWAP. Then we start to get the sell-off, and they come right back. And this is just textbook stuff that happens day in, day out. They get back below the roadmap level and come back to it, give it a nice healthy kiss with a nice bearish divergence right off of the fast-moving average. Great opportunity there. And then another opportunity just one tick in front with another bearish divergence, right? Then price continues to sell off. We did technically come to lower lows. But what do you know? Before we push to lower lows for the day or push to the low of the day, they came right to our next roadmap level where we found support for a couple of minutes there, and that led to probably the biggest bounce of the morning. So you can see quite literally how we step off all these roadmap levels and navigate all around them. So we held, right, barely any more than a point break from the next roadmap level, and then the bulls jump in and they push it higher. And on the way back up, what do you know? they pull back right to the, ooh, very pretty, right back to the 200 moving average or the roadmap level, right? So it held below the roadmap level when we got below it, and then got back above and then held it to push to the upside. We get the push all the way back up. You could have tried the pullback to the fast moving average. Again, very limited risk. And it brought you, what do you know, right to the next major roadmap level. It's just blows me away, right? So we come up, we get through it, we hold here, we hold the back end of the roadmap level here for the pullback, but it only gets as far as the fast moving average, which is something we talked about, and then came all the way up to the next roadmap level where we found resistance, only to pull back and bounce off the next roadmap level right here and come back up to the next roadmap level for the final resistance before we sold off for the biggest sell-off of the day. So here is another prime example of advancing away from the holy orange power level, coming all the way back to it, giving it a kiss to the damn tick, and then getting the biggest reversal of the day. That's why I say that there is no other place in the world you're going to get levels that are as accurate as we use here. So we come all the way up on the pullback, holds the roadmap level, bounces up, holds the roadmap level, holds the hopeful to the tick, pulls back, there you know, bounce off the VWAP again, just like it did back here. And then this is the beginning of the biggest pullback there. And you can see, once again, they get down below the VWAP and test it to the back end. There's even a kiss of the 200, and then we get the sell-off, only to come down all the way back to the low of the day. And you can see here, even if it looks like we just flushed right through our roadmap level here, well, if you would have taken a trade from there, you actually did get a couple points in the money before it rolled back over. And then the bears tried, and you can see the same type of price action here where the bears tried to hold the price right off the back end of our roadmap level once again. But again, there wasn't enough strength in that direction, and this began the next bullish push, right? And what do you know? Back up through the roadmap level, pulls back, holds it. Next roadmap level and VWAP, we get the pullback from it. Holds the fast moving average to advance back out. And then here we are coming right to the end of the day. And they come up. Unfortunately, didn't come right to a roadmap level in this instance, but pulled back. And as you can see, held the back end of the roadmap level, came down to the roadmap level, and then that was it. So just a quick snapshot here of the entire day. You can see just how perfect each of these discrete areas in the chart worked for entries that gave you, in some instances, 10, 20, 30 points with maybe a point of risk. So again, I conclude our review here just kind of making another case for why these levels are so important to have on your chart. And then you can see here in the overnight session coming into this morning, we have in the overnight, they come down, hold the first roadmap level nearly to the tick. And that gives you, again, a trade with 2 ticks of risk, and it is now pushed nearly 30 to 40 points up, right? So this is realistic stuff that happens day in, day out. Of course, you have to nail the level, but if you nail the level, you can get risk-reward ratios that are basically unheard of. People are trying to go for 2-to-1s. These are like 40-to-1 trades opportunities. And yeah, they're not going to work every single time you take a trade. They're going to work once in a while. Sometimes you're going to nail the high of the day, nail the low of the day, nail a major reversal in the market right off a level. You're going to have, in some cases, 0 ticks of risk, and the market's going to go 50 points in your favor before it ever even pulls back. So that is the type of stuff that I love. So looking at this last night, we hold the first roadmap level, pulls back to the next roadmap level on the way up, comes up through the previous daily close, pulls back to it, gets up through, comes to 50% of the day before for the pullback, holds the fast moving average. I mean, this is just kind of like, at this point, it is so ingrained in my head that when we're trading, it's like, oh, look, if we hold here, we're most likely going to come right up into the fast moving average or 50%. I know where I'm going to exit my trade. And if it doesn't rotate and come off that level, I have a runner for more, right? And if it comes back, I close my trade out. I wait for the next setup, right? Yesterday I had a really, really good trade at the end of the day as well, somewhere in here. As we were correcting back down, I want to say somewhere, yeah, right here. So we made up, came to this double top. We had this little divergence right here, right off the 200. We were pulling back. My market internals were giving me clues that we were potentially going to come in for another flush to the downside. I knew we were right at the 200 moving average. I knew I had a bearish divergence. I knew I was right around 50% of that little minor leg. I was expecting the market to push lower. I took on a trade that was maybe point or two of risk. I didn't take on much of any risk. I actually entered and it filled me at the VWAP. And then I was able to get a nice 5 and 10 point profit out of it and a 2-point profit out of it. So a 17-point trade with pretty much no risk, right? And that's how my day ended. I missed the trade of the day, which was right out of the open yesterday, if I can find it here. And that was the failure back through VWAP here as we were coming in. So if I could have gotten in here off the back end of 61.28, that would have been a nice 5 and 10 point fill down to the next expected support. But I missed out on that. And then later on, when we started to get weakness and fell back down again, I saw this happening and I went ahead and tried it when I saw the divergence right there off that second little tiny peak off the 200. Again, it's not going to work every time, but that's the whole point. Trading, you risk, you limit your risk, and then when your trades work out, that's where you make your money. At least that's the way I trade. I don't do little 1-to-1s or 2-to-1s. I get out quick on a 1-to-1, and then I have runners so I can make money when the market is working in my favor. And then you never know, maybe you'll go ahead and add something in on the way if it's really strong, right? So that is the review for today. We are now on the March 2025 contract. Let's go ahead and jump up to the higher time frames and we'll see what they have to say for this morning.